Hello, guys. Once again, I welcome you back. So I'm here to update. I'm here to make an update on order blocks, boom and crash order blocks. But basically, when we talk about order blocks, I'm not only going to use boom and crash for this illustration, but I really want to clarify something. You guys, I like challenges, and one of you commented. Someone commented. I think I got the comment yesterday that boom and crash does not respect or react to order blocks. So I went back to try to backtest, and basically, I may have to disagree, but I liked the challenge. So you guys, if at all you have some information from somewhere, it is really okay. You can comment it, and then I can clarify if at all I agree with you. Then I will agree because I like learning. I like learning. And today, let me use Crash 1000 for this illustration. This is Crash 1000. So I may not go back so much in details of what an order block is, but let me start by clarifying something. You see, order blocks, let me tell you about trading. This market is manipulated. This is a game of manipulation. That's why you guys, even when you get the right knowledge, you practice. You guys, you don't know, trading can give a lot of headache. It can give a lot of headache as you're practicing. So even with the right knowledge, you have to practice it a lot so that you can come to perfection, possibly. For order blocks, you're going to find that yes, you mark them out. It is not guaranteed that the market will always react to them. You get, because even when you go on today, I'm going to use an illustration also on gold, and then maybe we shall say gold and possibly even volatility 25 to see, does it always, are they uh, uh, are they always respected? For me personally, I believe it's not, because if at all we go back to the basic principle of, let's say, supply and demand, if at all the market is moving up like this, so we keep on breaking, let's say, areas of supply. You get, areas of supply, because in this area we can see that if at all we are on a high time frame structure, let's say the H1, you can see that in this area possibly the market was selling, but now we come and break it. So if at all you had marked this area as an area of as an area where the market could come, and then let's say it reverses down, then it doesn't get respected. You get, and then there comes a time when, let's say, the market is moving up like that, and then time will come and then we start breaking demand. You get, the market starts to break areas of demand, because previously the market has been reacting to areas of demand as it buys, and then it comes to break areas of supply. So likewise, as we are using these order blocks, you're going to you actually, these ones, order blocks are more or less supply and demand zones. You get, but these are special supply and demand zones. Basically, you're looking at, let's say, you're looking at an impulse. Let's say you're looking at an impulse, for instance, this one, whereby the market, but let me change the color of this. Let's say the market moved down, you get, and then let's say we are retracing, and then we are retracing along this impulse, and then you look out for an area where the market could come and react to, so that it can drop further. So you're going to be seeing that. But then I've already marked out some of the order blocks, and I want to really see, was the market really reacting to them. Now, for order blocks, let me also clarify this. They are going to be candles. Actually, uh, let me first define it, because I believe there could be some people who are new, but I've talked about order blocks so much, that's why I've been skipping. So if at all we get, let's say, the market is moving up like this, you get, something like this, you get. So let's say this is our market structure. That is our market structure. So now we come and break this structure here. We have a break of structure there, you get. So now we believe another block is the last opposite candle before a break of structure, you get. So for this one, I'm only going to use the bearish case, you get, but you can just make the opposite for the bullish order block, you get. For a bearish order block, so when we get a break of market structure there like that, you get, we could have a buying candle, let's say there. Most of the time it is an aggressive candle, But then we also have another one here. You get? And we have one at the extreme. You get? So now that's why for me when I'm using order blocks, I like to mark them out on a relatively higher time frame, so that when I drop on a small time frame, I see how the market reacts. So now you've marked out your areas like that. You get? These are going to be your potential areas of you selling. You get? So now we know the market is going to retrace. You get? As it retraces, it could turn here and then it comes down. That is one area. Or possibly it could come, it taps into this one and then it drops. You get? It drops. Or it could come to the extreme and then it drops. And possibly the market could come and react to this one a little bit like this and then it shoots up. You get? All these are possibilities. You get? All these are possibilities. Now that's why when you mark them out on a big time frame and then you go on a small time frame, you'll see a reversal in those zones. You get? You'll see a reversal in those zones, as we are going to see today. You get? We are going to be seeing that today. So you wait for a reversal in that zone. You get? But I believe supply and demand, because order blocks, if at all order blocks, these are supply and demand zones. We know that in every market where there is a candle or where there is a what or whichever movement, these markets, whether stocks or synthetic indices or forex, we know there are moments when supply has been holding and then supply gets broken. You get? And now that's what we call a change of character. You get? So I believe I've tried to explain. And now we are on crash. This is crash 1000, boom and crash. Now, we are, and then by the for order blocks, there is an element of break of structure. So basically, we believe that as the market is moving and then it breaks structures, you get? It breaks structures. We believe the market now is bearish, you get? So we look out for, so which means a break of structure is part of a talk about order blocks. You get? So now, let's start here. Let's start up here. You get? Let's start here. So we have a break of structure here. You get? We have a break of structure here. So now, on this impulse, you get? This is the impulse that came from up. You get? That came from up to break that structure there. You get? To break the structure here. So now, what are we interested in? You get? What are we interested in? We are interested in where was the last opposite candle? We have a candle, a bullish candle here. It's a bullish doji. You get? It is a doji but bullish. You get? You see? So if we marked it out on the daily, you get? If you marked it out on the daily, we come and break structure here. You get? We retrace in this area here. When you go on a small time frame, you will see a reversal. A reverse, what do I mean? You will see the market also reversing that area. You get? And then you take entries over there. You get? Now that is area number one. So this is another block, the market reacted to it. But now, by the way, you guys, be skeptical of order blocks. There are some candles that are really confusing. You get? For order blocks, we are mostly interested in either, you look out for these candles, either it should have a long body, fully bodied most of the time, or it should be like this, or it should be or it should be a doji like this. You get? For me, these are the order blocks that I like. You get? Either it should be fully bodied, whereby it has a big body, or should be a doji. You get? Now watch out for candles which are like this. That these candles, it has relatively a long body and then it has just a long wick like that. You get? And then this side there is no wick, or it could be like this. You get? These are not good order blocks in my opinion, according to my back testing. You get? By the way, you guys, everyone, even when you're learning, even me, from the person that I learned from, as we trade differently. Though, yes, I got a mentor sometime back, you get? Sometime back, and he told me, but as we trade, yes, we can all take profitable trades, but we are a bit different, and that's how the market is. you cannot be the same as we cannot all be the same. So I, according to my backtesting, I'm telling you the source of my information. It is backtesting. It is, for me, these candles, they can be order blocks, but they're not really good order blocks. And these are the best order blocks. These ones, these dojis, you get? These dojis are the best order blocks. Or these candles whereby it has a small body up, and then also it has a small body down like that. So those ones are really good. You get? They are really, really good. Let me just leave them there. So let's look for another. You get? So we reacted nicely to that. So basically, as we reacted and then we came down, this one was confirmed to be this one was confirmed to be an area of supply. You get? An area of supply. So even that one became an order block. So you keep on readjusting. So this one, the market came, we reacted to this, we broke down. So it created a little bit, some bit of equals, but it's okay. We reacted to this, we got a reversal, we drop. Where is the next break of structure? We have a break of structure here. You get? We have a break of structure there. And now, sometimes an order block could be two candles. You get? It could be two candles. You get? But then, or even three, or sometimes it's even a range. You get? An order block, it could be a range. Now, a range, let me tell you something about ranges. You get? You see, when uh, actually, sometime anyway, I'll talk about this later. But a range is generally considered as a point of indecision. It's considered as a point of indecision. So, as the market, if at all the market chooses to break below, you get to truly considerably go below, as a return, this could be an area whereby we could come back down, because if at all it was a point of indecision, ideally, if at all we broke down, so which means here this was a manipulation, but the market maker was intending to sell, so there could be some left orders over there. So for that one, I'll not go in details. And then we have another break of structure here. We have a couple of order blocks. There is a doji there. You get? Actually, let me first delete this. You get? There is a doji over there. We have a doji over there. We have a doji there, a bullish doji. And then where was the next candle that could possibly react to? That we could possibly react to? So you guys, let me proceed. I was interrupted a little bit. So we've seen that Crash 1000 has been reacting nicely to these bearish order blocks as we break the structures. So we got a change of character over here. And then let me quickly talk about one other type of order blocks. It's called the breaker order block. So basically, when we see that the market comes and breaks a structure, sometimes there is what we call this breaker order block. Now, for this candle, if at all the market is bearish, we are going to be looking for a bearish candle, a bearish candle. Or sometimes, if at all the market is bullish, then we shall be looking at a bullish candle over there. So let me just illustrate here it on the chart. So this is the the bullish breaker. Now we can see we came and broke structure above here, like structure here. So now, as we return, this is the breaker order block, this bullish candle. For this one, we don't look for a bearish candle. For this one, we look out for a bullish candle. If at all we are looking for an order block along this path, we are going to be looking for a bearish candle. But then most of the time, you're going to find that here we don't have any bearish candle. But then we've broken structure. You get? So there, most of the time, the market may come and reacts nicely to. Sorry. So it may come and react to this breaker, you get? And now you can see the market came and reacted to it nicely, and then we've actually even broken structure there. You get? We've broken structure there. So on the day we got a reversal, and now when we broke there, we return. This was, if I told you we're selling here, this was your take profit. How would you determine a sell? how would you determine SL? We have a couple of points of interest. We have a fair value gap over there. You get a fair value gap over there. So you guys, there are a lot of things for my students. They benefit a lot. If at all we are in this fair value gap and then we get a reversal, most of the times I always say on this channel that when we get a reversal in, a fair value gap, that is a pullback. According to my back testing, you get that is a pullback. You try me. So when we get a reversal, when I get a reversal in a fair value gap, I just know it's a pullback. And now when I'm taking entries, then it means I'm taking entries for an impulse run. You get, for an impulse run. So if I told you we're buying here, you'd be, yeah, you'd be good. You'd be good to go. So now, if I told you dropped, let's say, you dropped. Now we can see that we broke structure here. You get, we broke structure there, and now this is the last opposite candle. This is the bearish candle. Now you can see what I like about it. It has a wick on top and a wick on at the bottom. So now I can highlight it like that. You get, I can highlight it. But then sometimes, now you can see we got a reversal there. So sometimes we drop further on small time frames. You get, on smaller time frames, and then you refine a little bit because this is a big range. This is a big range on the daily. So on the H4 where was the real order block, you get, this is the real order block on the H4. So sometimes you drop on these small time frames so that you can try to readjust, and then you see how you can minimize the scope. You get, so because you have to not wait for so long. You get, you don't have to be waiting for so long. So that is the order block. You get, as far as the H4 is concerned. So you can see that we reacted nicely to it, and now we got a reversal there, and now the market is buying. You get, and now on the daily we know where our target is. So gentlemen, I really liked the challenge. Uh, because I really went back and tried to backtest. I was like, did I give out wrong information on this channel? So if at all you have any queries about anything that I've ever talked about here on the channel, and then you feel have a different opinion, please, you guys, you can always comment below that video, and then you give your opinion. I can always come and clarify. If at all I was wrong, I will admit. You get, for me, I like learning. And now let's come on gold. Basically, I want to really show you that the same things apply. I will not go far back in history. On gold. Just like any market, we see order blocks being missed out, and we see sometimes being respected. We have a break of structure there. We can see this is the last opposite impulse run. This order block here, the market tapped into it twice, and now we tapped into it. If I told you bought, you bought. The next day we came, tapped into it, Asian, and then we bought. We know the market has to create highs and lows and higher highs like that. You get? So as we came and we broke above, this was an impulse run. So we came back, we got a reversal nicely into that, and now we know we are bullish. You get? I've not started on the daily. So basically, you can see that order blocks in any market are either respected or not respected. So you have to really find a way of revolving around that, because basically in any market, not always supply holds and not always demand holds. Like we know it already. And that's for gold. So basically, the strategy, if you have a good strategy, personally for me, my strategy, even if you use it on Crash 1000 or like my on Boom and Crash or any other synthetic index or index or gold or in Forex, because for me I do them all, it can basically work once you have the knowledge. And now uh this is Crash 1000 on the 1 hour. So you can see basically how, if I told you had mapped out your zones like this, you see how the market creates within themselves areas of areas of demand. You get, areas of demand within, like within themselves. You can see. You get, so when you, as you go on refining further, you can get the best entry in this area, because already you have it on the big time frame that this area we could buy. Likewise, you can see that we moved up. As we returned, we reached here. We are not selling in here. You get? We are not selling in here. This is a time for us to wait and see. Then we get a reversal, the market moves up. Then likewise, this is we can come here on volatility 25. You may think that this only works on on one crash. No, volatility 25. We can see we have a break of structure there. We have another block here. The market comes. Wait for it. You see, wait for it and see how nicely it reacts to it. And if at all we get a reverse there, well and good. We take the entry. We take the entry. You can see how we created within this area an area of uh, an area of an area of demand. So you may not take in here. You wait for extra confirmation here. I can get in and buy further. You get, and I target my zones. So then for now, I think I've come to bring out more clarity on how I think about order blocks. So I always like challenges like this. I encourage you guys to do that. If at all you have any queries on anything that I've ever shared here, you can please comment it, or you can text me on Telegram, and then you'll be like, hey, maybe here I don't agree with you. It's really okay, because I also keep on learning. So let me talk about shortly about mentorship. The video is done, but now like the content is done now. Let me share about something about mentorship. uh I'm happy for those that are interested in me teaching them. I want to really caution you guys. Please, if I told you a student, please don't pay me your tuition fees. You get, to use them as mentorship for forex. No, you guys, I don't really support that, and I don't encourage that, because personally, I believe even with the right information, it takes time to regurgitate or to break down that information, and then you develop a trading style. Trust me, if you become a good trader, you will not even need signals. Maybe you need ideas. That's why for me, I'm going to share with you. I don't share signals. I trade setups. Let's say, like as I've been marking out these zones, I can share this zone as a buying zone. Then, when I've already told you how, like if I told how does the market react to a demand zone, if I totally get those confirmations, then we buy. So basically, for me, that's what I really do. That's what I really do.